Hi, my name is Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us as part of our Summit on Responsible Investment online series, and I have the pleasure of being joined today by Michelle de Cordova. Michelle is a principal at ESG Global Advisors. Thank you for joining us.
Oh, you're very welcome.
Michelle, you're joining us as part of our Summit on Responsible Investment online series to discuss, I think, some of the basics around ESG and what it is. So we're going to dive first right into what is ESG?
That's a great question. And it's something that can be very confusing. There are a lot of terminology that gets used that's confusing. People use the same words for different things, different words for the same things. But I think there are two really important concepts for people to get straight. One is the idea of how environmental and social factors impact the value of the company and the success of the business. And that is really what we mean by ESG. What are the factors that are financially material for a company? On the other hand, we have the issue of how the company itself impacts society and the environment. We'd consider that to be corporate responsibility or impact materiality. They're both important, but they are different concepts. Getting them clear in your mind does help you to think about what you're going to prioritize and when.
Thank you for that. I think that the terminology ESG has transformed as we've started to open our minds to it as consumers and as investors. And it's used sometimes in a broader sense, and now it's also being used in a very small sense. But it does cover a lot as far as what we do and manage ourselves from a corporate entity perspective, right?
Oh, absolutely. So the ESG and corporate responsibility cover a huge number of factors. Most of them are sector specific or company specific. So the factors that are relevant for a mining company or a cannabis company are obviously going to be very different. There are a few issues that are, I think we can say, are pretty much universally material for all companies. Human resources being one. Others would be business ethics, and increasingly cybersecurity for all companies. And almost all companies are impacted or have an impact in one way or another on climate change.
Absolutely. Okay, tell us about ESG Global Advisors.
Sure. So we're a consulting firm. We work with companies and investors to develop their strategies on ESG, on environmental, social, and governance, help them think through what do they need to focus on, what's the governance going to look like, how is this going to be incorporated into their strategy, and ultimately, how might they report on these issues to their audience of stakeholders who's interested in how they are approaching these issues.
Absolutely. Now, you and I, we sit together on a committee, which I think is amazing that we're starting to bring thought leadership and expertise to these types of discussions when we bring you into that table. And that's the BCSE Stakeholder Forum, where we have a cross-section of people from the capital markets. We get together and we discuss various policies that they're looking to implement or how to strategize on various shifts and trends within the market. So I think we're not going to have a table anymore where there isn't somebody who is representing ESG and how it is merging with within the capital markets. Maybe we could touch on where these two ideals are colliding.
Right.
What are we starting to see in the public markets when it comes to ESG?
Sure. So yeah, there are some very good reasons why companies in the public market space should be thinking about ESG. I think even for companies that are emerging, there are some factors they should take into account. To begin with, they could already be impacted by regulations that relate to ESG matters. A great example of that is the new modern slavery legislation here in Canada, which has within its scope any company that's listed on a Canadian exchange could be in scope for that requirement to report on what the company is doing, what due diligence is being undertaken to address the risk of modern slavery in the supply chain. But beyond that, even for companies that might not yet be in scope for regulations on issues like modern slavery or climate, they might have very important stakeholders who are already captured by either regulation or commitments they may have made in this area. So a good example there would be that a great number of asset owners and asset managers have committed to become net zero investors, to reach a situation where they have net zero portfolio carbon emissions by 2050, an enormous undertaking, and one that requires them to think about all of the companies that are in their portfolio. How are they transitioning to a low carbon economy? What is the impact on their own commitment of the companies in their portfolio? Similarly, you may be getting requests from customers who perhaps have made a commitment to measure the GHG emissions, greenhouse gas emissions in their supply chain. That means that they're going to want to know about the operational greenhouse gas emissions of all the companies that are in their supply chain in order to meet that commitment, or in some cases now that regulatory requirement to report on that. So I think it's going to be an increasing space of emerging companies being either facing risks or opportunities themselves relating to their ESG impacts, or their need to contribute to the ESG reporting, the ESG strategy of stakeholders like investors, like customers, who have their own needs.
So, this is something that isn't necessarily new in larger, more senior and late stage companies, but it's something that we're really starting to see happen in startup and growth companies in the junior space. Do you see that is onerous on them, or do you think that companies are trending and creating a pathway for this?
I think the pathway is what it's all about. It can be onerous. I have a lot of companies. They come and say, can you help me with an ESG report? And I say to them, are you sure you even need to do this reporting yet? Do you know what issues are important to you? Do you know what issues are important to your financial stakeholders, to your customers? And they haven't necessarily done that work yet. What I always recommend to people is don't begin thinking about reporting. Begin thinking about assessing the materiality of some of these issues for your company. Maybe they're not material. Maybe you don't need to take action on certain issues yet, but try to identify the issues that you should be taking action on now, and maybe things that you need to take action on in the medium and long term. Make yourself a roadmap, but begin that by doing some materiality assessment. It doesn't have to be a hugely complicated process, but do some work to identify what's relevant for your sector, what's relevant for your business, what's relevant to your key stakeholders. Reach some consensus on that within the company, and use that work to develop your roadmap for the short, medium, and long term, to identify what you will need to do and what you should do first, what you should prioritize. And it will become less onerous by taking that kind of approach.
It's a mind shift as well that I would imagine is difficult, for companies, let's say in the mining sector. It's a big shift to be able to take a look at what your practices are and what you would like them to be able to create that structure within your framework. Do you find that Canada stands out, or are we behind in the race as far as our practices are concerned in any sector?
I would say in terms of reporting, I think Canadian companies have done quite well on this. I do think it's quite notable the scope of Canada's modern slavery legislation. It captures companies that I think would not have been captured by that kind of regulation in other countries. That decision to make it apply for companies undertaking certain kinds of activities that are listed on any Canadian exchange, that brings in companies that, compared to, say, the UK regulations, the Australian regulations, that they targeted quite a bit larger companies. So I think that is something quite notable, that decision here.
I mean, here's the thing in Canada, one thing that I think we've done well is we've done well at creating the stage for the capital markets. So we actually have within our capital markets a lot of international companies with international operations. And the Modern Slavery Act, I think, will be a big endeavor for them to take on, because essentially you did explain it, but essentially what it means is the company has to look at the chain of the chain all the way down to where things are starting as far as manufacturing, and all of the service providers that they bring in, that they have best practices when it comes to slavery, essentially. Is that correct?
Yeah, it's so the real scope is for companies that produce, and that produce is pretty wide ranging. It's that includes extraction, that includes growing, so that brings in quite a lot of companies.
Yeah.
And companies that are importing, they are covered, and the focus is not on the focus is really on what the company is doing to explore its supply chain, and what its due diligence activities are to try to prevent instances of child labor and forced labor in the supply chain. The focus of the regulation, it's not on achieving perfection, that it will be very difficult for companies to guarantee that particularly in long supply chains, that those kinds of abuses might not take place, but it's for them to demonstrate that what are they doing to explore this and to put in place guardrails to prevent this kind of activity. And the key thing is to report. The requirement is to report, and to report honestly on the state of that due diligence, and to stand behind that assertion, rather than to perhaps achieve perfection in this area. Certainly not immediately.
It's disclosure.
It's about disclosure.
Right. And so the spirit of the new regulation is about disclosure of what you are aware of and what you aren't aware of in your supply chain. What advice would you give investors that want to impose a more sustainable practice in their investing? What kind of reporting should they be reviewing, or what information in the reporting that's created is relevant to them when making investment decisions?
That really is quite variable. There are different approaches to responsible investment. I think it's important for companies to be aware of the investors that they have that are important to them, and the investors that they want and would like to be important to them in future. What is their approach to responsible investment? Some investors are taking a purely fiduciary view on this. They're interested in purely in financially material environmental, social, and governance issues at their investee companies, and they are integrating data relating to those issues to their investment decisions alongside the financial data. But other investors are taking other approaches. They may be taking a thematic approach where they're particularly interested in investing in companies that provide solutions to a certain environmental or social concern. So they might be particularly interested in companies that are whose business contributes to the transition to a lower carbon economy. Perhaps they're renewable energy companies or companies that help other companies to reduce their waste profile.
We're
and so
seeing
on.
companies come to market that are specifically about carbon credits.
Absolutely,
They're in the business of
so that may be the focus for certain investors.
Right.
They may be thinking, oh, I'm looking for companies to put in a portfolio that correspond with that theme.
Right.
There may be other investors who are impact investors who they're really interested in companies that can measure and demonstrate how they contribute to positive impact on an environmental or social issue. So it really depends on the investor. It's like exploring what that investor is interested in is very important.
So one thing you touched on, which I think is worth, I mean, I'm learning as I go as well, but impact investing, maybe you could just touch on, we hear some of this terminology. Sure. What is impact investing?
So impact investing is when the investor is intentionally seeking to invest in investees or in bonds or anything else where there is a measurable environmental or social impact associated. So that might be measurably this investment's going to maybe improve access to water in First Nations communities, or it's measurably going to it's going to put out a product that's measurably going to enable other companies to reduce their greenhouse gas emissions. It has to be measurable. That's the key thing that distinguishes impact investing from some of the other responsible investment approaches, is that it must produce a measurable outcome. A measurable outcome in the real world.
Okay.
Yeah.
Interesting. What is your thoughts on where we're going? I mean, ESG has been something that in a lot of sectors has been discussed for a long time. This is not a new concept. We used to call it CSR, and we're seeing it in various sectors expanding very quickly, and in other sectors they're taking a while. What do you think is the next step for ESG, especially when it comes to the capital markets and finance? What happens next for us?
So I think there are a few things happening. I think, so on the one hand, there might be a little bit of back to basics that
I like that.
Is because there've been, there's some controversy about ESG. There has been some polarization on this issue. So I think that going back to what we were talking about at the beginning, that very clear conceptualization of what am I talking about here? Am I talking about how environmental and social issues are impacting the value of the company, are impacting my business, what we used to call ESG, or am I talking about the impact of this company, the real world impact of this company on the environment and society? And I think we might be going in both directions at the same time. One, really clarifying when we are talking about financially material issues, because everybody should be concerned about financially material issues.
Right.
And on the other hand, I think that there's actually a growing interest amongst large investors in also exploring that impact piece, in being able to demonstrate how their investments create positive change in the real world, that will create a lot of interest in what impacts need to be addressed, and how can this be measured? How can the change that be measured in the impact space? So I think both of those trends are going to be going forward alongside each other at the moment. But a lot of that is to do with people being clear about what their objectives are. Is the objective to protect the value of the company, or is the objective to create change? Those two things can both happen at the same time. But I think some of the disputes and polarization have been created by people not not perhaps being clear
Okay.
about what the objective is at a given moment.
You know, I have this conversation quite often, and I think really what it comes down to, even within the capital markets, is disclosure and clarity. And really, if you have disclosure and clarity around what your practices are, the rest will, you know, come to fruition as far as what you want to do. And like you said, you can't build a report until somebody has a vision of what they want to create and what you will be reporting. How would we find out more information about ESG Global Advisors, and what type of people would seek you out to help them? Would it be the companies themselves?
Right, yes. So please feel free to go to our website. You can learn about our team and some of the work that we do there. We have a very wide group of clients. Some of them are big companies, some of them are very small companies. Some are companies that are still private. Some are recently listed, thinking about listing.
Wonderful.
There's a right size of ESG for everybody.
Right.
Not some of the bigger companies that you will see. Just even I talked about materiality assessment a moment ago. That they might be doing huge research projects to do their materiality assessments, reaching out to surveys to thousands and thousands of stakeholders. Not everybody needs to do that, and certainly not at the start.
Right.
It can be, you know, you can undertake quite a small but useful project
Right.
to set yourself in the right direction at the beginning to work on ESG. I think there is a right size and a right flavor of ESG for everyone.
Wonderful. Well, on that note, Michelle, it's so lovely to connect with you. And thank you so much for bringing your insights today. Definitely go and check out the website for ESG Global Advisors. Thank you again.
That's a pleasure.
Perfect.